Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Gotten. Jumping into the charts on this October 27th, what a wild day it is today, especially in the after-hour sessions in the market. So if you look at the daily chart of the S&P 500, we had that initial reversal candle, consolidation, breakout, and you had this inverse head and shoulders which you've broken out of and confirmed on the daily chart on a technical basis. But after that 3-day bar surge, we were well prepped for a little bit of a reversal, which is what we got. This came on the back of Google and Microsoft declining, as well as Meta. And this little bit of a topping tail is a reversal signal for the short term. So this means this is your major resistance to beat if we anticipate going higher. Now, the interesting thing is what has transpired in the after hours is the S&P is down as well as the Qs. One reason, if we flip to Amazon, let me just remove a bunch of these lines over here just so we can see Amazon has collapsed. It was down almost 22% in the after hours session despite having a beat on earnings but missed on revenue. So this just shows you the climate that we're in comparison to what expectations are for investors. It seems that these trillion-dollar companies, well, not a trillion-dollar company anymore, but it seems like these massive mega cap tech companies are really starting to be tested in this new paradigm shift of quantitative tightening and higher interest rates. But when you factor in now that Amazon, if you can see where we were trading, you made a high here all the way in basically at the beginning of the year, trading at around 188, and now you're trading all the way down sub 192. So this is where things get interesting. Now it's down 51% from its highs. You can see this massive level of consolidation that is we're currently trading in. And we are now accumulating Amazon. Can it go lower? Yes, it probably could, but at some point you have to take your shots at accumulating these names. Apple right now is down, falling slightly. It was down over just close to 6% at one point before recovering most of those losses. Right now in the after hours, it is down 1.88%. We're most likely going to see some fluctuations in the price action just due to the conference call. Generally, the conference call, you do see big movements. But they had a double beat on their earnings from this point in time. But Amazon is clearly the big stock of the day. And again, our average is sitting at around close to 94. So I have no problem now basically building a position from this area and accumulating slowly for that technical bounce. Because when a stock like Amazon is down 50% from the highs, they are still generating so much free cash flow. Their balance sheet is strong. I mean, all it takes is a massive share buyback program to lift the stock at least 10%. And they certainly are well equipped to do so, even if global conditions are slowing down. Now, do I think Amazon goes lower from this point in time? Yes, I do, but I still think the indices are positioned for a potential technical bounce. And I mean, that's kind of how we're positioning. There's some stocks that we're shorting. There's some stocks that we're accumulating on the long side. But overall, a natural retrace on Amazon, I would expect it to recapture basically these pivots down here, get a climb back above that $100 level. And it has fulfilled the downside head and shoulders pattern that was in play. Now there is potentially a secondary one in play that we have to continue to watch out for. So if you analyze the chart now, we were watching this for potential head and shoulders. You have a left shoulder, or you can do it from here, doesn't really matter. A head, right shoulder. And now it looks to be that you could be basically triggering that as well to the downside, which would imply that there's more downside on Amazon to at least this $75 level. Now, that being said, even though the pattern is showing much more downside on Amazon, and that 75 level would basically take you below the COVID low and well into these pivots in 2018, early 2018, 2019 area. So that would be a massive decline. That would imply from our current level that it's still another about 19-20%. But things don't drop in a straight line. Earnings is kind of that one wild card. But still, Amazon is one of the safer blue chip company stocks that I think will be eaten up and bought back up in the near term. Enough for us to get in for a nice swing trade and out for hopefully a a good swing trade profit on a company that, once again, is still have a strong balance sheet despite this lackluster earnings report. So you can see that there's some little bit of buying now. Tomorrow we could see some margin pressure selling, but with that in mind, again, things won't go down in a straight line. Amazon now is oversold in the short term into massive technical levels. You can also see why we started accumulating here. Basically, you had this big gap fill over here after a multi-day period of consolidation and then an impulse move breakout. So this is where there's a lot of institutional volume that is sitting, as you can see on the chart here, and the price action is very likely to be defended. You can also see that this was an impulse move gap up to the upside as well, which means that there's massive amounts of volume and traders sitting there. So, and again, multi-year pivot tops. Amazon should have a mean reversion bounce, despite in the medium to long term there is potentially more downside target. So again, we'll just continue to monitor that. The big level on the SPY is you really want to hold this down sloping trend line. If we look on the daily chart, you do not want to close back below this down sloping trend line, and then worst case scenario, you do not want to close back below this down sloping channel, which was your inverse head and shoulders breakout. So this pattern still shows there's more upside, and technically speaking, you potentially have had a retrace to the breakout zone, which means that the pattern could likely move up. But again, with Amazon down almost 19, 20, 21% in the after hours, it's certainly going to weigh on the markets. You also had Tesla fall a little bit. You had Microsoft basically retesting that double bottom low. Pinterest was up, Intel was up. So there is some bright spots in the markets, but nonetheless, I mean, if we look at pins, we are shorting that one now. Basically, pins had this massive pop. We were able to accumulate at 2 buy points. Our average is slightly out of the money, but the big level on pins that I'm watching on the daily chart, and why I've chosen to short this, is you have this little bit of a topping formation in play, and the downside pattern takes you to about 1975 at the minimum. That just also happens to be a massive daily gap fill on their last earnings report. So it'll be interesting to see on this bad earnings report, the stock gapped up to the upside. On a stronger than expected earnings report, the stock has basically rallied to the upside, but is looking to give back most of those gains. And the big question is, are we going to close back below this this neckline here of this head and shoulders topping formation? If we do, this head and shoulders pattern is still in play to the downside, and it certainly favors a higher probability break to the downside. I still have it priced in that pins still needs to head to the low range of this channel. Basically, you're trying to put in a basing formation here, but with the weak market up ahead, and if the Fed surprises people with a 75 basis point hike, I think the markets are not going to react kindly, and I think we will see more downside. But the big level on pins, it's looking like we want to still close below this. If you even look on a weekly time frame, you have a big reversal candle to trade against, which is why I wanted to get some exposure to pins. This weekly reversal candle on pins is our range. You have your high, you have your low, and basically, let me just erase that line. Anything inside of this bar, trading inside of this weekly red bar, is still technically bearish weekly consolidation, which favors a move lower. So again, we have a massive wide range red bar to trade against, which I absolutely love to have that in our back pocket. It's kind of our little bit of a reinforcement and backup for our technical price action. If we take a look at the QQQs, the Qs were under pressure. A big line in the sand for Qs is, will it close below both of these trend lines? You can see the inverse head and shoulders trend line is in red, and then the breakout trend line on the daily chart is in yellow, this down sloping channel. We are currently trading below that. If you close below that trend line, this pattern is known as a failed pattern, and there's likely more downside. Now, we did not fulfill the downside pattern of this head and shoulders formation. We slightly missed it, but it's needless to say that we could see a little bit of a double dip testing this double bottom before they rip it back up for a potential bounce in the markets. But again, there's a technical gap to the downside on the Qs, just like there is on the spiders, and this is a big level in the sand. Tomorrow will dictate whether or not we close below this level, and it really is going to hinge on what Apple does at this point. We all know Amazon is weak very terribly, but it's all going to hinge on what Apple does. Let's take a look at some of the other sectors here. So if we take a look at gold daily chart, basically finishing flat on the session. That's healthy. A pause day is not bad. Consolidation is good. That means if I'm surprised that gold didn't sell off despite it being a pretty big bounce in the dollar, a strong one. And we said the dollar was likely going to retrace back to this 50-day moving average. You can see there's a slight bit more of upside for the dollar to retrace back there, but it's needless to say it is pretty much at that level. Again, you haven't confirmed below the 50-day moving average, so that means that this uptrend is still technically intact. Now, if you do confirm by making a new lower low, then that means the uptrend is, in the short term, is broken, and you're probably going to test this 108.70 to these pivots, this 108.70 to 107.70, kind of like a dollar range that we'll be trading in. And it's good to see that pins, again, is dropping in the after hours. Take a look at this. It's basically coming back in our level. That is super healthy to see. Let's jump back to silver now. We can check out what silver is doing. Silver was basically up slightly, again, consolidating due to the fact that the US dollar was up. That's pretty surprising for the markets. Now, the bond market, in my opinion, is kind of signaling, especially the 2-year yield, potentially the Fed is only going to hike by 0.5%, kind of like what the Bank of Canada did. And the reason I say that is you've had this sharp move down from 4.63 all the way back down to 4.228. And what's important about that is we hit a peak hawkishness level in September, where the bond market was expecting a lower rate hike, and now we've hit pretty much that same level and we're trading below it. So the bond market, in my opinion, is signaling that the Fed currently is only set to raise 0.5%. The consensus is 0.75%, but again, I think with these earnings being decimated, like the likes of Amazon, Meta, Google, Microsoft, Apple, is not too bad, but it's only a matter of time before that happens, where I think they step in and they say, okay, let's not be as aggressive as we are, and we can always do more in the future if inflation keeps persisting. But again, I think the bond market is signaling that the Fed is only going to be a 0.5% hike. Now, the big thing for this 2-year yield is we are starting to break critical levels here. We have this trend line going back from your February pivot to basically an August pivot, connecting through this chop over here, and now you have basically broken that level and looking to confirm below this trend line. If you confirm below this trend line, it's likely that interest rates have made a near-term cycle top, and it's going to just trade in a range, probably bouncing from this low end from 4% to maybe this 4.36%. I think that will be the new tradable range in yields before they inevitably break lower. Now, the big thing to watch on yields is the rate of change movement that is occurring. This has been a sharp sell-off from the 4.64 down to now the 4.27. If a sell-off continues to occur, that's the bond market signaling a liquidity crisis driven event, and we will look to exit all of our longs no matter what the situation is, because many people think that interest rates falling sharply will lift the markets, but that is generally the wrong conclusion to make, because it means that the bond market is sucking all the liquidity, and basically it means that people are fleeing to bonds for a store of safety because they anticipate some sort of a black swan event to occur in the stock market. And yes, it's a black swan event. We don't know what it would be, but you can certainly follow the liquidity flows in the market. Let's take a look at oil, the WTI. Sorry, let me just pull up that chart. WTI was basically up again, but reversing off of its highs and closing pretty much just slightly positive, a little flat in the session. WTI has not broken out yet, despite people confirming that it has broken out. You can still see it's trading in this downsloping channel. You're at resistance over here. This is the level to beat. Even if you get through that, you still have a little bit of this mini double top zone as resistance, this massive sell-off pivot to beat. So oil, I still have it priced in that we should go lower, 79.19, and we're still obviously holding our SCO short, a small position nonetheless. Let's take a look at natural gas. Natural gas did have a down day today, so let me just erase all of these drawings. So natural gas had another down day, but the interesting thing about natural gas is you're still consolidating inside of this wide range green bar. If natural gas were to consolidate maybe another 2 days at the lows here, I would potentially look to go long again for a mini bounce and then just have a stop loss pretty much at these pivot lows. Where I still think natural gas can have a potential retrace to on the maximum is up to this neckline. Basically, a shorter term resistance point is going to be obviously this level, which you're tagging right now. And then that's healthy to see when you're brushing up a trend line on it multiple times, it gets weaker, so that resistance point is weak. But this would be another big level. If natural gas were to shoot up in and amongst this trend line, that would be a level to probably take profits. It would also likely coincide with these double bottoms and this breakdown zone over here, which looks to be in about a week and a half that natural gas could get to that level if these resistance points were to play out on a technical basis. So we're looking at November 7th for a potential upside move all the way on natural gas to that level. Let's take a look at Bitcoin, BTC, USD. So Bitcoin, we took our profits on Bitcoin. Glad to see that because you have had a pullback off of our sell level from the 21,000 level. So that is super healthy to see. Let's just bring that up a little bit. So yeah, it was just around 21,000 we sold. But basically it has pulled back off that level. Now you still are consolidating and you're at support. You can see this pivot, these pivot tops, and you're basically teetering along that knife edge. If Bitcoin were to basically pull back to this 50-day moving average, you can see these two pivots, this pivot zone over here, I may consider looking to go long again. And the reason being is you'll now have ample supports in close proximity to either A, accumulate more and dollar cost average down, or using the lows as a stop out, mitigating your risk. So I always like to rinse and repeat trades, especially when they have broken out and confirmed on a technical basis. And there's always a chance, like this is the Bitcoin zone which broke out. This is your major breakout line. And basically price action tends to retrace. So even if Bitcoin retraced all the way back down to this yellow trend line, that would still mean the technical breakout is intact for a potential move out. And you never know what could happen with a big flush out. You get people on the short side thinking Bitcoin, this is it. It's had a failed move, failed breakout by negating these two breakout candles. And then it basically erases all, people sell out, people pile in the shorts before they rip it back up. So this is your big level, your big line in the sand, this downsloping yellow trend line to hold. As long as you stay above that, the Bitcoin uptrend is technically intact in the short term. Now, I still think Bitcoin heads lower. We're still trading basically below this, oh no, we're not anymore. We're right teetering on that edge, but you can see the pivot high here in 2017 is still a big level of support, which you're just kind of chopping under, above. So the big question is eventually this bearish formation will break down. You're kind of making a similar pattern to what you did over here. Basically, you can see what transpired after you had your bear flag. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks of consolidation before breaking down. Here you've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 weeks of consolidation. And the reason you're consolidating more at this time frame is because you're at a multi-year support level. So that's really the only reason why that Bitcoin is holding these levels. If we take a look at Amazon again, Amazon has basically recaptured our level and is at the level where we are now sitting with our average. I still think Amazon can retrace back to this neckline around this 106 level, which would be a beautiful double-digit gain for us if we get that retrace. And I do think that is certainly possible, but down 50% on the year, I have no problem starting to accumulate and build a position when Amazon was trading 50% higher basically a year ago. Let me just see if there's anything else we can touch base on. We did short Walmart. You can see Walmart's into some big time resistance here on a basically a 4 or 5 bar surge into this parallel channel of resistance. You fill the technical gap here, and now you are at these little bit of reversal signals. Walmart is approaching earnings pretty soon, but we could certainly see Walmart start to basically fall again. And one of the reasons why is anything inside of this wide range red bar, which was your massive sell signal, Walmart is still going to be sell. And if we retraced even back to this trend line, see this orange trend line connecting your COVID low, your breakdown, that was your massive breakdown level, and anything under and inside of this wide range red bar is bearish consolidation, and this is shaping up for price action to head much, much lower. We could see a sharp move down in Walmart, even though it's considered a safe haven, blue chip company in times of stress or an economic chaos. But again, accumulating a short on Bitcoin. We also started shorting EME. Basically, we wanted to pick up a little bit more energy exposure. This is a beautiful chart. If you look at EME, connecting basically your COVID low here, major freak out pivot, intersecting with a wide range red weekly bar, and you've hit that pivot top there, and you just hit that pivot top there. Not only do you have that massive trend line, if you throw in a secondary trend line, this was your topping formation, which triggered downside for EME. This is basically known as your neckline, which you've now retraced to a T, and it just so happens to be at a double top scenario on a pretty extended straight move up. So again, lots of technical factors for this trade. You are still technically overbought. In the short term, you've had 1, 2, 3, 4, 5 weeks of upside. And then when you look at the ETF XLE, XLE has had a magnificent move up. Basically, you hit this double top zone today, just shy, you could not pierce it. Whenever you get close to a double top but you can't pierce it, it's a sign of major weakness and that this is the top. At the minimum, I expect to retrace back to this downsloping trend line, which would be a big drop in the XLE, which would mean the likes of Exxon, Chevron, Valero should all see some downside, EME. And I like the fact that we got that beautiful little bit of a reversal, closing back with inside yesterday's candle. That is healthy to see. Even if we look at the big boys like Exxon, look at this beautiful neckline or this beautiful trend line that we've been trading on. This was your break. You found support. You've basically rallied, hit that trend line again, pulled back, rallied, hit that trend line again just to the upside, and you are at new all-time highs in an overbought condition, and you got a beautiful reversal signal on volume for Exxon. There is earnings tomorrow, so that'll be interesting to see how things shape up. There is the potential that Exxon can float all the way up to the top of the channel on good earnings, but I expect this to reverse very sharply even with strong earnings. I think the earnings have been priced in, so any weakness in earnings will certainly hit the stock pretty hard alongside the energy sector. And based off of the reversal signals and the resistance points hit on the XLE, I do think we're very close. Even with the likes of Valero, you got a beautiful daily reversal signal here, closing back not within 1, 2, but 3 candles, and that is very healthy to see on Valero. A stock that we basically added to our short here at 131.87, pretty much picking the high. That's good to see. One of the reasons we added to our short is you have this beautiful symmetrical channel connecting your pivot high, and you just tag that to a T inside of a wide range red bar sell-off. So again, if we flip to the long-term chart, all of this consolidation is very reminiscent of the price action in oil, sucking in new money, so bullish on the energy sector, but yet you're still trading all of this price action inside 2 weekly wide range red bar reversals on volume. As soon as we hit this level, these sellers are going to come again and just crush this price action. This is the likely scenario that tends to play out. If we take a look at Apple, Apple's actually had a very strong reversal. So that's clearly been bought up to a T. Daily chart, Apple was down on the day. Basically, you didn't want to see it lose this level. In the aftermarket hours, it retraced all the way back down, filled a couple key gaps, and now you've reversed and gone positive. That is exceptional price action for Apple in the short term. So again, we are shorting Apple at this 151, so we're still in the money. I have no problem if Apple shoots up higher, continuing to move forward, because I do think eventually this stock will come in sharply at some point in time. But nonetheless, impressive reversal on Apple. It is giving these major indices a little bit of a facelift and recapturing those key trend lines that we were watching for on the QQQ and the SPY. So let's just take a look at the Qs again to see how Apple is actually single-handedly lifting the Qs back up, pretty much testing those 2 trend lines. So that is something impressive to see. Amazon, we're now in the money on our trade. Pinterest, we're kind of flat in the trade. And it's just really impressive to see Apple trying to go positive, and now it's actually lost it's a little bit of its momentum. So Apple's going negative, kind of doing a fake out here. So that is not good for the markets. Apple's selling hard now. Obviously, that's going to put a tremendous amount of pressure on the overall indices. With that being said, please give this video a big like down below, and